afternoon, I'm Jennifer Christian and I work as a portfolio specialist in the investment management team, and I'm going to provide you with a brief overview of this week's market summary. Global equity markets declined at the start of the week after US ISM manufacturing PMI came in at 47.8 in September. Not only was this the lowest reading since 2009, it was the second consecutive reading below 50, which is the line that separates expansion and contraction. However, it is worth noting that US PMI data has dropped below 50 before, and the US economy hasn't fallen into recession, and so that could well be the case again given the strength of the US consumer. Consumer spending is the most important driver of US economic growth, as it accounts for just over 2/3 of US GDP. During the week, there was also news that the World Trade Organization gave the US permission to impose tariffs on $7.5 billion worth of EU imports in retaliation for illegal government aid to Airbus, which could further hit the Eurozone economy. However, Friday's US employment data quashed recession fears as it came in generally in line with market expectations, allowing equities to recoup much of the sell-off at the start of the week. Additionally, revisions to the prior 2 months of non-farm payroll data were positive, and while wage growth was flat month on month, the unemployment rate fell to just 3.5%. Furthermore, the week's mostly underwhelming economic data pushes us closer to the inflection point, where global central banks provide further monetary stimulus. And as we have previously stated, we believe that the Fed will cut US interest rates again when policymakers meet at the end of this month. And finally, the FTSE 100 was one of the week's worst performing markets thanks to its heavy exposure to oil and mining stocks, which underperformed due to worries that the global economy is slowing down. For example, over 15% of the FTSE 100 is accounted for by BP, which was down 4.7% on the week, and Shell down 4.17% alone, while Glencore and Rio Tinto ended the week 8.24% and 5.04% lower respectively. And this coming week, a Chinese delegation will visit Washington for trade talks aimed at hammering out a deal. And if China and the US can end their trade conflict, the global economy and global equities could quickly recover. Now that's all from me this week, and don't forget, if you haven't already, you can also read a more detailed insight into matters affecting the markets in the email.